There's a massive sell-off in the stock market. This is the worst Monday we've seen in over 2 years. There's panic, high volatility. Are we on the verge of going into another recession? My name is Jeremy Blossom. I'm with Everlasting Wealth, and we're going to break down what's happening. Now, we have been talking about this for months. This has been a delayed, in my opinion, a delayed bear market turn. I think that we should have had this months ago, but the Fed has artificially been keeping the stock market up with the Magnificent Seven. If you don't know what the Magnificent Seven is, those are seven companies that have also been keeping the stock market going up, which include Apple, Nvidia, Amazon, to name a few. So right now, we are seeing stuff that has been in the works for months. And let me break down exactly what that is for everybody. Okay, so first and foremost, you need to understand the economic landscape that we're in. We've got a massive debt crisis. Just a few days ago, we surpassed $35 trillion in debt. That's the most amount of debt we've ever had as a nation. It's not the amount of debt that should scare you, it's the speed at which we're accumulating this debt. Just take a look at this. This is showing some major economic cracks because it took us over 200 years to accumulate $11 trillion in debt, but we've done it again in just 4 years. Look how steep this curve is. Can we sustain that? I don't think so. And how are we going to pay for all this? Well, I don't have an answer for that either, but the stock market's finally paying attention. Because if you look at history, you could see that we haven't had debt to GDP ratio this bad since World War II, and it was because we were in a world war. Sadly, with just how hectic the world is right now, we're not even in a world war. We could be on the verge of World War III, but that would just make our debt even worse. And when there's uncertainty rising, there's volatility in the stock market. It becomes a self-fulfilling prophecy, and that's exactly what we're seeing now. With all the geopolitical stuff that we have happening, with all of the issues we've got with our banks, I'm going to go into some of this stuff. We're seeing uncertainty rising. If you asked yourself how you felt about the world today, if you felt about the economy, I think everybody would say, yeah, I feel a little bit uncertain. Put a comment below and let me know, are you feeling a little bit uncertain? Is there somewhat of an issue right now with what you see versus what Wall Street's telling you or what the government's telling you? I think most of us would agree that the vibe on the street is definitely than what we're seeing the vibe on Wall Street. And now, maybe just now, we are finally seeing that the vibe is catching up to Wall Street and they don't like it either. And the reason is because we're feeling it on a personal level. We're running out of savings. We've had inflation rampant for years, and the Fed has tried their best to curb it. But when they say they're getting it under control, all they're saying is that the speed of which prices are going up is slowing down, but they haven't brought prices down. Hence, every time you leave your house, you're seeing higher prices. I know at least I am, and I'm here in California, and it's bad out here. And this is going to impact the stock market eventually because if people running out of savings, that means they're not going to spend. They call it the Magnificent Seven that are really the ones driving up the stock market. And if you want to take a look at just how overvalued these seven companies are, we took a snapshot of the seven most valuable companies on the US stock market and compared them to the entire market of China, Japan, India, France, and it's bigger than all of them, just seven companies. And we call this a top heavy stock market. If we look back at the dot-com bubble, we also had a top heavy market. We had Cisco be worth 5.5% of our GDP. Well, guess what? Nvidia, that AI wonder stock, that's worth 11% of our GDP. And frankly, I just don't see how it could possibly be worth that much. Are we overvalued? Is there a correction happening? I called it actually in a live event a few weeks ago where I said we might just see an AI stock market bust, meaning this AI bubble that's been driving the stock market for years might actually start to show some cracks. Maybe I'm right. We'll have to see. Now, there are some early warning signs of a recession. Okay, the first thing that usually happens is this shock and awe, which is what we're seeing now. When we lower interest rates, which is what everyone's anticipating that Jerome Powell does eventually, and I think that we're kind of irritated right now that he didn't do it earlier, but when he does, I want people to know that that's not necessarily a good thing. Okay, just take a look at this chart. When we lower interest rates, we see that the stock market falls on average 23.5%, and it takes about 195 days for it to do that. That'll create even more market chaos. So if you are looking at an opportunity to invest in the stock market, take a look at this chart and ask yourself, is this maybe a good time or a bad time? I can't answer that for you, but it's just food for thought. The other thing that you should know is how the markets work. There's an old adage in trading that says that the markets like to take the stairs up and the elevator down, meaning that the markets come down a lot faster than they go up. And we're kind of seeing that now, aren't we? Take a look at the last 4 times we've seen the market drop more than 30%. Look how fast it did it back in 2020, just 18 days. And that's because the speed of information is happening faster and faster and faster. And there's a lot of algo trader platforms out there. There's a lot of algo hedge funds out there that are just looking at numbers. Things are getting triggered, and holy cow, are we seeing how fast the market can move downside. Now we've got Warren Buffett. Warren Buffett's been making news because guess what? He has said, hey, I think stocks are overvalued. There's a Warren Buffett indicator that people use, and you can see that that also hit all-time highs. And he went to a heavy cash position, taking risk off the table, thinking this is not the right time to be invested, and he went to cash. These are just signs, folks, early warning signs of what I think could be a massive recession coming our way, which usually also entails some sort of a banking crisis. We had one last year. A lot of people have already forgotten about it, but it's because we are sitting on a bunch of unrealized losses. The inability for a lot of these loans that businesses have taken, they can't pay them back. We've had record high bankruptcies in 2024. Again, not a headline that a lot of people are talking about, and it's starting to show up. And I think if people took a really close look at just how fragile our banks are, they would be even more inclined to get out of the market. And now we have this unemployment crisis. We saw just a slight miss in unemployment. I believe this also could be at the very beginning of what we see as an unemployment crisis. We already know that AI is after our jobs, but let's put AI off to the side and just talk about how if businesses aren't making money, they're going to be having to lay off their number one expense, typically, which is people. So we could see a massive unemployment crisis, and that really is the nail in the coffin and really does solidify a full-blown recession if that happens. Now, we have this hidden agenda. I believe it's been a hidden agenda for years, which is to keep the dollar weak. By keeping the dollar weak, it allows us to pay back our debt at a lower cost. And right now, we've had a lot of talk. Even Elon Musk has asked, are we on the verge of going bankrupt as a country because of how much money we're having to spend just to pay the interest payment on the debt that we have? That $35 trillion, oh yeah, we have to pay an interest payment on that. In fact, the interest payment now is greater than our entire defense budget. It's the number one expense item on our federal budget, is paying back debt, just the interest alone. If you were a family and let's say the biggest expense you had every month was your minimum payment on your credit cards, would you be in trouble? I think we all know the answer to that, but that's why they want to try to keep it low. And we have, this is scary, we have a record $9.3 trillion of US debt that's going to mature within a year, meaning we got to pay back $9.3 trillion within a year. We have never been in a position like this as a country, and that could, in my opinion, cause a debt implosion, which is going to send the dollar even weaker. So we saw this happen. I took this snapshot of the dollar when the Fed announced that it would cut rates by 3 times in 2024. We've yet to see the first one cut. And guess what? We saw the dollar plunge. We're going to continue to see this trend of the dollar plunging so long as we keep printing money. And this is pretty normal, actually, because we see ebbs and flows with a bullish and bearish trend for the dollar. We were just in a long-term bullish trend for the dollar, and now we're about to enter a bearish trend for the dollar. Now, remember this, because there is something that we can all do about it, and that is the golden opportunity for people to finally become diversified outside of paper assets. For decades, most people have just considered paper assets, which are stocks, ETF, mutual funds, things like that. Well, there's a whole world of investing out there that involves tangible physical assets like land and real estate and precious metals. And precious metals is my favorite. And the reason why precious metals is my favorite thing to diversify with, physical precious metals, is because it's the most liquid physical asset in the world. Gold is a $14 trillion market cap asset class, and it's also one of the most liquid markets in the world. And guess what gold just so happens to be? A safe haven investment. So, if you're wondering what's going on with the stock market, I hope you learned a little bit more. If you're wondering what you could do next, take a close look at physical precious metals. They might be the answer for you. That's all I have today. Thank you guys so much. God bless and take care.